Good morning, traders. Today is Wednesday. Let's take a look at the key market movements and major themes driving the US dollar, oil, gold, and yen today. At the start of this week, the US dollar index extended its slide, touching a fresh 3-year low at around 96.38 in European section trading. And technically, the index has been declining for 6 months, marking the steepest first half drop since the introduction of floating exchange rates in the 1970s. Market sentiment is being shaped by rising expectations of a Fed rate cut, policy uncertainty around President Trump, and progress in global trade negotiations. And according to the CME Fed Watch tool, traders now price in for a 93% chance of a September rate cut. Meanwhile, ongoing tensions over the 3.3 trillion spending bill and Trump's criticism of Fed Chair Powell continue to weigh on the dollar. And attention this week turns to June non-farm payrolls and PMI data, which could confirm labor market weakness and push the index further down to 96 to 95.5 support zone. And technically, there's a near-term oversold rebound risk, but any bounce is likely to be seen as a corrective rather than a trend reversal, given that the Fed's dovish tilt and reshaping global trade dynamics. The daily chart shows a firmly bearish moving average setup with the 50, 100, and 200-day SMAs acting as resistance layers. The MACD histogram has narrowed, suggesting a slowdown in downside momentum, while the RSI sits steep in oversold territory in 90 at 29.3. On the downside, watch for 96 and the February 2022 low at 95.13. An initial resistance stands at 97 and the 9-day SMA at 97.972. Next, moving to WTI crude oil. The oil prices start this week under pressure as traders anticipate OPEC confirming its August production increase at its June 6 meeting. While rising US tariff risk casts a shadow on global growth, Brent and WTI both retreated during the Tuesday Asian section. In mid-June, tensions in the Middle East sent WTI above 77, but prices quickly reversed after President Trump announced a ceasefire between Iran and Israel. Now, traders are cautious ahead of OPEC meeting, as well as potential shift in US trade policy. Technically, WTI remains under its 20-day SMA at 67.16, keeping the short-term bias negative. The RSI is below 50, and the price pattern resembles a descending flag. If the key 64 round number support breaks, prices could slide to last week's low at 63.72 and the June 6 low at 62.2. And conversely, reclaiming the 65 level and the 30-day SMA at 65.23 could open the door to retesting 67.16 and the June 24 high at 67.53. Now, let's talk about gold. Gold prices strengthened early Tuesday, trading near 33.40, which is up more than 1% on the day. This rebound follows a strong move from last month's low, driven by expectations that the Fed will resume rate cuts soon and continued weakness in the US dollar, now at its lowest since February 2022. Meanwhile, investors remain cautious ahead of this week's key US macro data, including Thursday non-farm payrolls. Tariff policy uncertainty before the July 9th deadline also supports gold, while traders seem unbothered by positive equity sentiment. Technically, the momentum indicators remain strong, with the RSI above 50 and MACD pointing upward, reinforcing the bullish case. If momentum continues, gold may retest the 3400 psychological level and possibly challenge the June 16 high at 3452.7. Initial support lies at 3300 and below that 3245, and a break below 3245 could extend losses to 3200. And last but not least, dollar yen. The yen traded firm near 3-year low at around 142.8 on Tuesday, supported by stronger Japanese data. The Bank of Japan's latest Tenkan survey showed improving business sentiment among large manufacturers, and firms see an inflation staying above the 2% target for the next 5 years, strengthening the case for more rate hike. Meanwhile, the dollar stayed weak amid rising bets on Fed cuts and Trump's threats of higher tariff on Japan, which Japan's negotiators warned could severely damage the economy. And technically, dollar yen's break below 143.45 is a key bearish trigger, especially after slipping under the 200-hour SMA at 144.39 on the 4-hour chart. And daily oscillators show negative momentum, suggesting the path of least resistance is lower. Support lies at 143, then 142.75, and finally the 142 round mark. Resistance sits near 144 and the 200-hour SMA at 144.39. A strong break above these could see dollar yen recover toward 145, but for now, rallies are likely to be capped. So overall, global markets remain cautious and data-driven, with the dollar facing headwinds, oil volatility tied to policy risk, and gold buoyed by safe haven and rate cut expectations. So trade smart and have a great day.